The price of oil has dropped by 15% since April of this year. This is going to lead to one of the biggest opportunities on stocks of 2024. I'm going to show you what the recent drop in oil prices means for the market, but we're also going to see where oil prices are likely to head next. Falling oil prices is typically a good thing for the economy and markets because it translates directly into less consumer spending because people are spending less at the gas pump. It also means higher profit margins for businesses because they can spend less on energy and transportation costs. And finally, falling oil prices means falling inflation and so falling interest rates. All of these things here are great developments for the stock market. From our research, if oil prices were to rise by 30% from here over the next few months, which is something that has happened quite a few times just over the last few years, we would immediately see that translate into a lower stock market. This would instantaneously drag the stock market lower by around 10 to 15%. And then the shock on the economy from these rising oil prices would almost certainly trigger a recession in the United States. As many of our indicators today suggest, the global economy today in 2024 is extremely vulnerable to this type of oil shock. But as you can see today, that's not what we're seeing oil do. Oil prices have been moving down quite substantially over the past couple of months in a similar fashion to what we saw between October of 2023 and December of 2023. And falling levels of inflation in the United States has been one of the primary reasons why the stock market has done so well since the end of 2022. Every time that oil prices move lower, it seems to propel the market higher. And that's simply because of all of the reasons that we cited at the beginning of this video. If you were watching these videos back in April, you'll know that this rise in oil prices was how we anticipated this correction in the stock market, and that this fall in oil prices is how we anticipated the bottom in stocks. Now, recently we've seen oil prices move even lower, which means two things. First of all, it means our short trade on oil that we have on gameoftrades.net is playing out nicely. And then secondly, it's reaffirming our short-term optimism on the stock market. Don't be mistaken. The key factor driving the market today is inflation. It is oil. And if oil goes down and stays low, that's going to lead to investors getting optimistic on the market as long as we're not in a recession. But in order for that to happen, we need oil to stay low. How do we know that oil isn't going to be staging a massive recovery here, which would make any upside on the stock market be very short-lived? One trick that I like to use to know if that's going to happen is to look at what other commodities are doing. This chart that you see here is a basket of different commodities. There's wheat, soybeans, cotton, but there's also things like copper and nickel to represent more of the manufacturing side of the economy. And when we compare this basket of commodities to oil, you can see most of the time these commodities rise and fall at the same time as oil prices. But sometimes we see divergences occur between the price of other commodities and oil. That was the case, for example, in 2008. Other commodities were rolling over while the price of oil was continuing to move higher. Eventually, oil caught back down to what other commodities were doing. The same thing happened in 2011, where other commodities began to roll over while oil prices were still rising. Eventually, oil made a 180-degree turn and started to move lower. Again, here in 2013, commodities were warning that oil was going to peak. In 2014, commodities were warning that oil was going to peak. Again, in 2018, commodities were warning that oil was going to peak. And as recently as March of 2022, we also saw this type of warning signal from other commodity prices that were rolling over right as oil prices were still surging. So it seems that when these divergences occur between commodities and oil ends up coming back down to reality. But you can see there's also moments when commodities are rising while oil is falling. That was the case in 2006. Eventually, oil turned around and started to move back higher. The same thing happened towards the end of 2008. Other commodities were starting to move higher while oil prices were still trending lower. Eventually, oil prices turned around and caught back up to other commodities. Fast forward to 2020, and we see that other commodities bottomed in March of 2020, while oil prices bottomed in April of 2020. So again, these other commodities have a predictive power on oil. Now, if we look at what's happening today, we did see a brief divergence between oil and other commodities in May. But when we look at the most recent price action, we see other commodities have actually fallen quite aggressively recently. So overall, these recent developments are not telling us that the economy is experiencing strong inflationary forces like in 2021 and 2022. And oil and other commodities are actually telling us that inflation is not picking back up. If you've been watching our videos, you'll know that we've had this view for quite some time, and that the short-term trend on the S&P 500 is still very much pointing up. Falling inflation is a great thing for the stock market as long as the economy is not in a recession. And although every day we do believe we're inching closer towards a recession, the economy right now is still steady. This has allowed us to participate in some fantastic trades since the beginning of this year, printing an average of 17.8% return on our winning trades, and with a small average loss of around 3.8%. I'm very proud to say that we have helped our clients make money in 2024 and most importantly, limit losses. There's no guarantees that we'll be able to continue doing this, but we'll do everything we can to.